So what's changing in the next 5 years? I do not think any business can run by looking at the rear view all the time. Oh, what's going to happen? What's going to happen? You have to focus on your fundamentals.
Yeah.
Now, what's changing? Number one, the consumer demand, consumer behavior is changing. Second, technology. That's a big thing that's happening. And therefore, I'll just restrict myself to these two. There can be umpteen ways to look at it, but I'll focus a lot on the digital aspect or the tech aspect. Today, when we design processes and give requirements to tech, do we really put the user or the customer at the center of it? And are we able to think systems? Are we able to think the bigger picture and say, you know what will be the impact of this particular process 1 year down the line? So there are certain, ways to handle this. We have two problems: availability of capital and efficiency of capital in this country. Indian GDP is close to around 300 lakh crores and our credit to GDP ratio is around 65%, which means roughly 200 lakh crore of credit that's out there in the market. China is around 5 to 6 times bigger than us. So if we have to reach even China's level of GDP in the next 5-10 years or maybe more, we are talking about 300 lakh crore becoming 1500 lakh crore. And if credit to GDP ratio improves to even say 100%, we are still talking about a 6 to 7x growth.
Anish, I think this is a nice culmination of our friendship for a long time, that we are sitting together and having a nice chat. With that, thank you very much for doing this. This is really nice. I think we're going to spend good time having fun talking to each other, right? So, first of all, thank you for doing this.
Thank you for having me.
It's customary. Thank you. Second, I think we have an interesting topic what we've been discussing over the last few days. If you look at it, future of banking, what it entails, there are a lot of people who wish to know what happens in 5 years from now. Then let's add future of banking with a chapter of risk management as well as capital mobilization, which are very relevant to where we stand today in the banking industry and very contextual for us to take it forward as well. That's the kind of a conversation that we can have for about next 60 minutes to see how we can share some insights, and people whoever see or hear this should get a lot of insights through, right? So on that note, what do you look at risk management evolution? How have you seen risk come along? How do you see the risk parameters changing? Any broader brush on risk that if you can speak about?
Sure. So first of all, thanks for having me here. It's, we keep chatting on different topics and, this is a very interesting forum to share some of these perspectives. Look, banking, if you put it in that perspective, in my view, is all about risk management. Because ultimately you're dealing with capital, which belongs to investors, which belongs to the public. And therefore, how you handle that risk becomes very crucial. Now, be it in terms of protecting the capital itself or in terms of your operating risks, also in terms of, the digital threats, etc., that are emanating today, all of that becomes important. Now, when you look at risk fundamentally for banking, it's very simple. At the end of the day, you've got 100 rupees which you are sending out. Is that money coming back in? Or you have taken 100 rupees from someone. Are you ensuring that they are getting back that money and some more? Now, to do that, of course, the contours are changing, right? So, if you look back, as you said, the evolution in India itself, risk was about, getting the basic guardrails in place and rule-based systems in place. But of late, last 10, 15 years, a lot more evolution has happened even from the regulator's side.
Yeah.
So for example, you have the Ind AS coming in, you have, the whole regulations around what the board should do, a CRO mandate and so on. So a lot of onus is there on governance. There's a lot of onus on bringing in, best practices across both public sector and private sector. But as we progress, things are again evolving further in terms of the skill set, in terms of the kind of mindset that the risk function evolves, how you look at analytics rather than just rule-based principles. So from risk or rule-based, you're moving to principle-based risk management and, of course, data, etc. So there's a lot of evolution that is happening both in terms of the function itself and also the role that it plays in the organizations.
So it's funny, right, about risk. Suddenly, when you start looking at risk as a word that comes into your mind, you'll start seeing everything to be risky. The way the word itself has a connotation towards it. So let's go a little differently of risk to look at it, right? Let's assume that you and I are the risk managers in a bank, right? What's our inner circle of risk and what's our outer circle of risk, right? What's in your control and what's probably, as you keep moving, what goes out of your control? Maybe you can picturize this. That'll be nice.
Sure. So, it's a very interesting way you put it that, what is in my control and what's not. I think there are two ways to look at it. There's nothing in my control if I do not build in controls, right? But I think what you're also alluding to is the environmental factors. And I think that is something which is very important, because the environment is becoming more and more dynamic and more unpredictable.
True.
Somebody said a very interesting thing, the best way to not have any risk is not to do anything.
Not to do, exactly.
Right?
Yeah.
No, that's not possible. So to that extent, the word risk has been coined because you do not have things in your control. But it's about probabilities. And therefore, how can you reduce the probability of your losses or unwanted things to hit you?
Yeah.
That becomes important. But I think one paradigm shift that's essential to understand is that we are moving away from an event-based risk management frameworks to something what I call as resilience-based frameworks. Because the external environment itself is so dynamic that your black swan events will be much more frequent. Your ability to even find the complex relationships between various variables is going to be very difficult. Look at the recent tariff wars, Almost every second day the tariff rates were varying. Imagine the ship on the Pacific. It doesn't know what rate's going to apply to them. So how do you really start predicting in these environments, right? And therefore, when you look at the framework, one, of course, is classically starting from how you look at data within the organization and your typical operations, etc. Have you standardized them and started identifying the gaps therein, ability to get predictive signals out of it? The second part, which I often say, is noise to signal ratio. There'll be a lot of noise in the environment, within and outside. Are you able to discern it better?
Yeah.
And the third, of course, is external environment. There are a lot of things happening. How are you able to pull in all those information and take the right decisions, which again I feel is a lot in the domain of AI algorithms coming in. But yes, the frameworks will evolve as the environment evolves.
Yeah, while we come to AI and all of that, but I'm still on the topic of inherence of risk, for example, right?
Sure.
Is it fair for us to say that risk has gone borderless, for example, right? Because of the fact that there are certain factors today, as you rightly said, somebody was telling me during COVID time, saying that there are these viruses which are there right now, right? Somebody scared the hell out of me saying that in 2020 that in Antarctica ice is melting. As the ice melts, this is not melted for ages. There are more viruses which will come along with the water. This is going to be a continuous phenomenon.
Yeah.
4 years fast forward, I think we've evolved a lot more better, at least a little safer environment that we have today for ourselves, right? Now, if we say that risk has gone borderless, and from what you spoke about, what are the factors that we look at it, right? How do we bring in a bit of resilience in it, right? Am I going to be shielded across some of these factors because, hey, I'm resilient towards it? Now, this resilience displayed by, let's say, about majority of the banks in India gives resilience to the economy itself. So what are those resilience factors that comes to our mind wherein, at times we come across this saying that, hey, there's a recession in the other part of the world, but India is quite a resilient economy. What do you think are those factors that will help us be resilient towards some of the risk and mitigating? How do we become more resilient rather?
Sure.
In this context.
Sure. So I think there are two parts to your thing. First of all, there'll be a lot of things that will be out of your control and keep happening. But again, it goes back to probability of events. Something, can it happen? Can there be a COVID-like virus which can bring in? Yes. But how much weightage would you assign to that probability is the question, right? So it starts with two things for banking. One is, do you have enough capital?
Yeah.
And therefore, the resilience capital starts from the fact that there's a stress test, and if things really go bad, are you able to recover?
Yeah.
The second part, which is very, very important, is can you look 1, 2, 3 quarters ahead of yourself and start calibrating things? Let me give you a classic example. And I think, a few quarters back, the regulator came back with this entire signaling on stress happening around unsecured assets, right? And they immediately increased the risk weights. And you see, there's a tapering up of that started happening already. There was a bit of a, pickup in terms of credit cards and MFIs, and now it started, it looks like in control. So it has not blown out of proportions.
True.
So at a macroeconomic level, be it the regulators, the government functions, and even private entities, how well are they able to monitor and take actions 2 or 3 quarters in advance, number one. Number two, in terms of how quickly it translates into action internally within the organization. So the agility and your ability to transmit and decision into an action on the ground will be another very big factor, right? So the ability to execute well. And I think the third piece is doing your fundamentals right. At the end of the day, no matter how complex the world becomes, the first principles remain the same.
Yep.
Cash goes out, cash comes in. And whichever business entity you are in or business model that you are in, at the end of the day, if you are doing it right, for example, we all know that it's a high risk customer you should not lend to. No amount of data can change that if there is a willful default risk in an individual or if there is a possibility that the person cannot pay you back. So the question is, a lot of times people say, no, let me do one thing. Let me charge him higher rate of interest so that my credit cost can be covered from interest. It doesn't work like that. You can't price every risk.
Yeah.
There's certain, beyond a point, it's not just about pricing a risk. It's about getting into the fundamentals of whether my money is going to come back. Now, those principles remain the same. If you're true to that, it will happen. So these are the three things which I feel are very important for it.
Very nice. Lot of things that you brought out there. One was, of course, I remember this unsecured loans going down, wherein suddenly most of us started lending towards NTBs rather than ETBs rather than NTBs, right? We started lending to the right part of the funnel rather than the top of the funnel kind of situations, right? That happened, and that I think we grew resilient over a period of time. But also that point in time, I could see the buzz that goes around, right? Is what, if you look at it, all factors remaining the same, we are in the same market, we are functioning. The buzz is what creates that bit of risk and the bit of caution. Risk comes with caution, and that's where the resilience will have to take over, right? As you rightly said. So the point about what you made about money goes out, money comes in, we still have to have that basics of bank account. How much do you earn? How much do you spend? I think COVID taught us what's your actual credit card statement, what's your bloated credit card statement, right? That's what the actual credit card statement, some of us got it during COVID times, is actually required. Rest of it is all bloated up for us, right? So you actually put it very nicely about the fact that it is this bloat that has the innate amount of risk, not your actual needs, right?
Absolutely.
Whatever we buy extra, where we overstretch, and it's required for the economy at times overstretch, at times every one of us overstretch. So going forward on the same lines of risk part of it, right? There is a culture that also shapes. You've been a banker, you've been associated with a large conglomerate for a long time, right? How much does culture play a role in risk management, in making that resilience, to bring resilience inside an organization, right? One is outside resilience. It's like, how much of immunity have you built it across the organization, saying that, hey, these are the fundamentals at which we've gone ahead and done this. These are guardrails. We operate only around this. So we are resilient to some of it, right? How do you think that can shape up with culture as an element?
Very, very important. I think perhaps the most important, or at least among the top two, if not the most important, because look, it starts from the top. Let me also dissect it further. It starts from the top. I mean, I'll give you a very interesting example. There was a very senior leader, a CEO of a particular financial institution. And I know he was well-meaning. He would talk about, controlling the risk, NPAs in the town halls, in his management meetings. But when it came to reviews, and he found that the numbers are missing, he would question the credit team in terms of why that particular file was not passed. And he said, okay, bring it all to me. I'll look at it and give deviations. Now, what it did over a period of time, and I've seen that happen, is the credit cost went up. Now, what are you signaling? You signaled that, the CEO is ready to give exceptions because that's the need of the hour. Growth at the cost of risk. But with this thing, but everything cannot be told by models. Let me have a look at it. So it created a culture of exception, though the formal communication was always about, managing risk. So it's not just about what you state in your policies, on your whiteboards and on your buildings, but what you actually live by. And therefore, it starts with the boardroom. It starts with the leadership. Are they holding the key tenets dear to the ground, right? So once you do that well, and if everybody is aligned to that, then all your practices, etc., start coming in. Right? Why have you done it? The other example that I would always give is, in terms of culture, there's a clash that I see happening today. Data versus experience.
Yeah.
Right? A lot of times you will say that, I have seen so many cycles, I've done this. I know that, this is the right way to manage.
In my past, I've done
In
it
my
like
past,
this.
I've done this. It's not wrong. There's
It's
a
not
lot
wrong.
of value to human intuition and judgment.
Yeah.
But data is also throwing up a lot of, insights which earlier weren't possible. The important is, how do you marry the two?
Yeah.
Right? So if that art is well understood by the people and not taking it egoistically, but having the humility to discern hypothesis versus another hypothesis. I often say, is it your hypothesis, is it your belief, or is it your inference? And a lot of times we conflate that in real life as much as we do it in risk as well.
Yeah.
Right? Let me take an example. There's a human judgment happening, and you look at a customer, and somebody is preparing a credit memo when you do an assessment of a file. And the credit manager is convinced that I want to give him a loan. How would you draft that document? You would say that credit assessment memo would be drafted stating, while the management is new, they have a lot of experience in the business.
Yeah.
Now you've already biased everyone, stating that experience, but they don't have experience in that particular organization. They may have past experience.
Correct.
It's a different interpretation.
True.
So how do you take biases out of conversations? How do you allow data to play its part and then allow? So I have seen champion-challenger models play out very well. One of the experiments I have done in the past is we laid out human scorecards and we gave deviations in a measured manner. We said, you know what? You can override the data scorecards by 10% and let the data scorecard override humans for 10%. Let's run multiple such models and we'll keep evaluating and we'll drive the best of both. So I think it starts with leadership and also how you marry data with this. I think these two factors are very important.
I think we went with the point about how risk has gone borderless, right? As a industry, what should we be cautious about? Anything unknown that can come? This is not like a hypothesis, but probably a word of caution on what could sort of push us a little bit of taking one or two steps back. Probably maybe your thoughts around that.
Look, I think the answer lies in what you said. It's unpredictable, right? I wish I had a crystal ball in front of me, and But let's go back to the point that you were alluding to in the beginning in terms of what are the key principles, what are the ways to look at it. So what's changing in the next 5 years? I do not think any business can run by looking at the rear view all the time. Oh, what's going to happen? What's going to happen? You have to focus on your fundamentals. Now, what's changing? Number one, the consumer demand, consumer behavior is changing. Second, technology. That's a big thing that's happening. And therefore, I'll just restrict myself to these two. There can be umpteen ways to look at it, but I'll focus a lot on the digital aspect or the tech aspect, especially because as more and more things are digitalizing, and when I say digitalization, it has two parts, the tech part as well as the data part. So the risk that lies are, 2-3 things. One, are you hallucinating? Are you, getting a lot of false positives, or you're missing out important key factors because your models are wrong? So do you have enough, the point that you were mentioning earlier, do you have expertise to understand the models and improve upon the models? Number one. Number two, in terms of tech, there'll be a lot of interesting stuff that will keep coming in, and a lot of people will offer to the CIOs that, why don't you try this? There'll be a FOMO effect. It's very important to come out of that and say what is really needed, because there's only that much that you can do from a tech perspective. Today, the amount of bandwidth that is choked in the entire banking sector is incredible.
Insane.
It's insane. You know it well, how difficult it is for anyone to start another new project. So how do you ensure that the tech debt doesn't pile up? Because that opens you up to vulnerabilities. And third, of course, is frauds and cybersecurity and digital threats. Because again, there are a lot of vulnerabilities opening up. And so these are the three large themes I see on which, it can derail your story, maybe as an entity, if not as a country.
I remember one line some very experienced banker told me. She told me that we are like an organization right now who put the patient in the operation theater, and we are operating every part of the body and trying to keep the patient alive. When you spoke about tech debt, I just remembered that nuance that this senior banker told me, right? She was absolutely right in terms of saying that, there are so many tech transformations.
But it's so ironical, right? Because on one hand, you have a Viksit Bharat goal, and we are all dreaming to climb that, so-called Everest. You can't take a patient of ICU up there, So there has to be some middle ground.
Or a better ground, right? So the transformation tech debt that you spoke about is a big one because of the fact that I still feel there is a lot more on collaboration, what we could do together, right? Very rarely we speak about, let's say, as an organization, one is from the risk point of view, if we deviate a little bit towards in order to manage risk, you got to give a little bit more collaboration across the organization to look at assessing it a lot more better. I think collaboration is one word which is understood but not followed in my view, right? We understand, collaboration is very critical, but let's get this done, right? Right? So coming back, the organization's viewpoint today to look at times I've seen organizations working only on the escalation areas, not on the strategic stuff, right? The important stuff or the strategic stuff. The tech debt part of it, what you spoke. Let's go a little deeper into the tech debt part of it as well as how AI can help and things like that. I'm pretty sure banks would have done, most of the banks would be doing a research on looking at, hey, I have about, let's say about 5 lakh people working. I'm just taking an arbitrary situation. Out of this, I can look at about 2 or 3 lakhs of people who are doing this kind of a task. Can I go ahead and help AI automate? And more importantly, what's the risk associated with the AI? And more importantly, we are a very, very people-friendly as a country, right? How do I look at transforming these people's career as well? Nobody's career should get impacted. We're at that phase where we can balance people's career as well as how do I bring in AI to improve productivity, so-called to ease the tech debt a little bit. Maybe your thoughts around this on how do we bring in AI to ease the tech debt to control the risk a lot more better, because AI means it uses a lot of data, machine learning, LLMs as well as whatever it processes could do much more, and it could give you a framework for us to see how do I only see the risk part of it rather than seeing the whole journey from where it's come. Can I trust it at this level and take it from there?
Sure. So I think let's step back a few and understand why tech debt exists. There are two broad reasons. One, maybe you have legacy systems and architecture which do not allow you to build the right systems, and you take shortcuts. So you're forced to take shortcuts, number one. But I think the larger piece which a lot of people miss out is how you give requirements. What is technology? Technology is automating certain processes. If your processes themselves are not designed, thought well, if they're not really, the most efficient and most articulate, you will end up having garbage in, garbage out. Today, when we design processes and give requirements to tech, do we really put the user or the customer at the center of it? And are we able to think systems? Are we able to think the bigger picture and say, what will be the impact of this particular process 1 year down the line? So there are certain, ways to handle this.
Yep.
One principle is design thinking.
Yep.
Which is human-centered. You put everything there. Second principle is platformification. Whatever you build platforms, not monolithic systems. And third, keep it very modular and component-driven, so that tomorrow when you have to replace a certain part of your journey or software, you can just plug in and plug out. This needs system thinking.
Yeah.
And most importantly, the people cannot be thinking in silos, the point in collaboration that you spoke about. They cannot be thinking like, I am product, you are sales, you are business, or you are tech. Everyone has to own that agenda of digital.
Yep.
Right? So this needs a different skill set. When this cultural shift happens, you will suddenly find, I can tell you, the bandwidth in the banking sector can increase by 2 to 3x. Because I've worked on those very granularly. Wow. I've built such systems. I've seen the power of collaborative thinking, and I've seen the power of platformification with design thinking. But that is missing because we kind of take pride in jugaad. Jugaad works very well in a resource-poor economy. India, of course, we are short of resources, but we are far better off. We have to now think 5 years, 10 years, 20 years down the line. And therefore, systems thinking instead of jugaad thinking is the next fulcrum. When you get this right, then let's bring AI into relevant areas. Because artificial intelligence cannot take away from this human consciousness. That's very important. We all have to be conscious about what kind of systems, processes, and culture that we are building. So I would go to the extent of saying the tech debt that we see today in the industry is actually a cultural debt and a skill debt that we are running.
You're right, actually. To a certain extent, that tech debt needs to be cleared for AI to actually flourish and do well. Right? What I mean to say is, let's say, if I don't have a data strategy, if I don't know how to deal with my data, if I don't know what are those processes which can get impacted by AI, I will also continue to be working in silos in AI, not like across as an organization which is connected and take the best horsepower out of AI for the organization, right? So sort of the organization needs to become a level playing field. Hey, this is where my tech architecture has as you rightly said, or platformification happens and AI sits on top of it. All this is easier said than done because of the fact that they've got a bank to run, not just the tech part of it. I'm sure we'll get there. So shifting gears towards, let's say, using AI, quite a lot of people have a connotation on machine learning versus big data. All that is not AI, but you've got to look at training LLMs, and you alluded towards your previous point on hallucination. And my personal reading has been that we are very rich on data. As a India market, we are very rich on data, and the way we use data, no other country uses it today, right? So what are your thoughts on any of the AI use cases in the context of risk management, in the context of seeing how we could play this to our advantage, and how could we be the leaders in risk as a market, as a geography, so that we are the flag bearers, very similar to various other accolades that we have in this industry?
Sure. I think good that you spoke about taking a leadership position. And one thing that is driving that leadership to a great extent is the novel Indian way of building digital public infrastructure.
Yeah.
If you see the India stack, if you see ULI, for example, which is nothing but trying to aggregate all the data. So we are already, as you rightly said, very data rich thanks to all these initiatives by the government, public sector, and a public-private sector initiative. Now, what I feel that can happen on top of it is two things. One, we build our own sovereign AI model.
Yep.
Because there is a contextualization. By the way, there's a lot of work happening already on that space. Not only has the government allotted budgets there, but there's a very interesting work happening in that space to build our own sovereign contextual models. But that's one part. The other part is, I think we need to look at, especially from a risk management perspective, there's a lot that can happen. Today, a great amount of application work is going on in terms of conversational AI and also in terms of automating documents, etc. I think one space, and that's more of a hypothesis I have at this point of time, but I think it can take off a bit, is to look at underwriting very differently. See, today, what do? We have certain macroeconomic indicators and dashboarding which flows in to give a macro credit profile and also identify any signals that you receive about a corporate, especially when you look at corporate lending, SME lending, you get those figures. And for retail lending, it's more about macroeconomic. Or you have individual underwriting that you do for a particular entity. So you look at your balance sheet, P&L, and stuff like that. I'm talking something in middle. What I envisage is a heat map of sorts, a predictive modeling, which kind of gives you very sharp indicators that you might encounter 3 months down the line and not something 2 years down the line.
Wow.
For example, let's say you have done some lending to a company or to an entity which is very heavy on agri space. Now today you have satellite imaging data and the land cropping data and your weather patterns. If you accumulate all of that, it'll merge all of that and it'll give you a perspective in terms of how you see the revenue generating, not only at a macro level, but at a district level, at a local geographical level. Now, suppose that entity you have lent to is very, having high operations in, let's say, south of India, maybe in, say, Coimbatore. But the rainfall patterns indicate adverse signaling maybe north of India. That data has no meaning for you. South India's Coimbatore region is looking good enough. You might still continue to call it low risk.
Yep.
Now you can therefore, what I'm trying to talk about is granularization of data and insights that can happen at like a heat map for the next rolling quarter basis. Because today with AI, you can actually combine first order, second order, third order effects of data and draw some very sharp insights. And I think that is one space where not much work has happened. So how do you leverage multiple data sources thanks to the proliferation of DPI, build models on top of it, which is very contextual to such heat maps, specific to various kinds of lending use cases, also deposit mobilization, investments, you can then go on expanding the scope. That will add a very different layer of risk management to what we practice today and kind of de-risk yourself from the tyranny of the balance sheet-based lending or, bank statement-based lending alone.
It's amazing. Actually, you're actually defining the crystal ball slowly. Right? So it's very interesting of the shift that we've seen in the last 10 years to see, right? Suddenly, you just spoke about connecting an agricultural data with this, which means to say we are by default being a country which is going to be progressive on all facets of the industry itself, right? Agri by and large has been one of the difficult ones to transform 10 years ago, 15 years ago, lending and all of that, right? But what, as you touched upon, what our government is doing across the other areas, it will be significant big leap in the next few years to come, right? So moving towards, as we move forward towards beyond risk management, risk part of the portfolio conversations itself, right? What do you think is our resilience that we can build towards managing capital adequately well? We've had this era of CASA drive, which is happening. I'm still somewhere, the old thought in me tells me that I need to have a bank account, salary needs to come in bank account, then I'll decide how much to spend. I might be traditional guy. But whereas there are radical thinkers who are saying, how do I lend to a person who doesn't have a bank account? Right? Who absolutely has no bank account, but this ULI money comes in. The person might have a piece of a land or some huge amount of gold sitting, whatever that could be, right? How do I lend to that person? So looking at it from the perspective of capital that we keep talking about, deposits, how do we build resilience within organizations, right? So your thoughts, initial thoughts around it, and then I want to give you a little bit of a stumper question next.
So I think capital is a very important aspect you've touched upon. Let's just decode a bit in terms of where we are. I think we have two problems: availability of capital and efficiency of capital in this country. Indian GDP is close to around 300 lakh crores, and our credit to GDP ratio is around 65%, which means roughly 200 lakh crore of credit that's out there in the market. China is around 5 to 6 times bigger than us. So if we have to reach even China's level of GDP in the next 5-10 years, or maybe more, we are talking about 300 lakh crore becoming 1500 lakh crore. And if credit to GDP ratio improves to even say 100%, we are still talking about a 6 to 7x growth in our credit market, which is huge, because even if you take a gearing ratio of 1:6, that means for every 1 rupee of equity you're lending out 6, we are still talking about adding another 200-300 lakh crores of equity into the market. Now, do we have that much of equity? If you look at the retained earnings of banks or the banking sector, I think it's around 4 lakh crores. So, if it keeps growing, we're still going to need an additional 200 lakh odd crores of equity that needs to flow into the market, give or take. Now, if that amount of equity has to come in, we do not have that base today.
True.
It needs a lot of things to happen right. Yeah. So first of all, availability of capital is a problem that we need to solve for. And the second is the efficiency of capital, how well you are deploying your capital. Are you getting the right set of returns, the optimal returns on capital across the sectors of the economy? That's going to be a very important play as well. So, for example, SMEs, they're going to be big growth drivers, and they are facing a credit gap of almost 45 trillion. Now, if that has to come down, what are the other practices that you bring in so the flow of capital is there without too much loss? Or for that matter, rotation of capital, velocity of capital is again going to be very important. You might lend 1 rupee, but if you're rotating it fast enough, you're still going to get things moving. So we need to solve for all of these things very, very properly. And banking, of course, will have a big role to play to make this happen.
Yeah. I think the rotation of capital is something you spoke very well. Today we can see so many other cities. We spoke about smart cities some time back. I think the cities are getting smarter as you travel around the rest of the part of the country across. Cities are really getting smarter and going faster. Capital rotation will be very critical for them to flourish, especially the unbanked sector, as well as what we are doing in that direction, right? So let me come to my stumping question, which is digital is actually killing loyalty. What I mean to say by that is your thought process around this. Is digital actually killing loyalty? For example, traditionally, my dad kept a lot of money in FDs, let's say, right? Fixed deposits. Now I'm in an era wherein everybody around me is telling me that don't keep your money idle. There are growth instruments. There are various other things for you to grow, or various other things through which you can actually make your money work faster for you or better for you, right? This is the ironic nature here is this is contrary to CASA and the deposits that you want to drive. What's your thought process on how banks could get a method to this? Still driving deposits. Term deposits is one idea which is working for certain banks, and we see some of them advertising extra interest rates. How could actually banks drive more and more deposits? This question is always in my mind that hey, everybody's talking about driving deposits, but there are other ways in which people want to pull out of money out of their banks and go ahead and make it run faster for you or give better yield for you, right?
So I think you've put together 2-3 things. Let me just peel this off. One, you spoke about digital killing loyalty. Let me quickly, try to hit your ball up for a 6 rather than getting stumped out. No, look, the point is, what is loyalty?
Yeah.
Loyalty comes from emotion and experience of a particular brand being there, and I want to keep consuming that brand because I like it. I think it's not digital which is killing loyalty, it's awareness. As people are getting more and more aware, of course, digital allows you to express that awareness into action better. But people are also more informed today. They have choices and they're more informed. So I think this is an opportunity in the sense that if I really build a customer-centric brand today, people would actually love to be more loyal to me. And I'll give you a very quick example here. If a very large bank, they were among the first ones to remove the prepayment penalty from the loans they give, LAP, etc. And there was a huge uproar because typically these have a prepayment penalty because it forces you to stick around. And this particular leadership said, let's not do that. Why? Because if the we have to be customer centric. If the customer doesn't want to maintain the relationship with me, let him go. He'll be happier.
Yeah.
Right? And they said, no, we'll lose a lot of money and income will go out, etc. They did lose income for the first year. But then later on, they found the growth actually back and growing. Because the customer went out very easily and they switched back. They said, maybe I saved 10 bips, 20 bips by going to the competitor. But this bank allowed me to go out so smoothly and actually like their customer experience. It was not worth it. They've come back. Right?
It's a good one.
Same thing with digitalization. If you really care for your customers in your DNA, so I think the competition is less today.
Yeah.
Right?
Well said.
Yeah. So that's one part. Now quickly coming to the other aspect, and therefore, what should banks do? I think this race for deposits, CASA ratios are coming down as we know. It's already around 40-45%. Term deposits, obviously, because it's also we are going through a very interesting cycle in the last few years, especially post-COVID. We've had a situation where the small caps, mid caps have given a big growth. People have had time to invest in the markets, and the term deposit rates therefore had to be increased to catch up. So because of this big arbitrage and the opportunity to invest easily, there has been a lot of flow that has happened into the SIP market and equity, etc. Is it going to be a permanent trend? I wouldn't say so, because there will be a tapering of expectations as we can see recently. So you can't expect the market to keep growing at the rates that people have seen in short bursts. You take the long term. Now, of course, the data shows gold has given better returns than even equity. So I think this age-old rule of asset diversification will remain.
Right? That's what
The way to look at it is, what banks will have to figure a way out is not to treat deposits, especially CASA deposits, purely from the perspective of, not CA, of course, savings account, from an investment perspective, but to figure out ways and means to increase the float opportunity. So if more transaction velocity is there, more opportunities, and if you are attractive enough to hold it for the longer periods of time, you can still manage to maintain a good base of stable capital.
True.
So it's not, so that stability will come with more diversification and better customer centricity. Third, I see a deepening of instruments happening.
Okay.
As more investment opportunities come in, because it can't just be a binary between equity or banking deposits, or for that matter, gold and real estate. These are the 4 major means today.
True.
But there'll be more opportunities which will expand. Like, for example, the regulators talking about the corporate bond market, the retailization of that. So as these things expand, you will suddenly find that, there are more avenues and therefore things will come to a more matured base. But having said that, India still has a very high dependency on deposits. Somewhere as the wholesale bond markets and other capital markets deepen, you will find banks having more alternate sources of capital. So I think it'll play around as it goes. So there's no one single answer, but yes, hyper focus on customer centricity is still the key.
I still like you really hit the ball for a 6, the first one, right? I still like the thought process. What you said is absolutely right, because a lot of bankers today, I think that experience is changing. It is not like, for example, metaphorically putting, where when you walk into a public sector branch, you're about to change your loan, or the branchman is almost like holding your hand, don't go, right? Those days are gone. Right? Those days are really gone. But now the days are wherein, no problem, I stand for my service. You can come back anytime. I think that I've seen it multiple times bankers displaying. Secondly, I think a lot of banks are also looking at during the collection when the customer is about to close a loan, how do I give a phenomenally great experience so that he returns back to me? That conscience is coming to it, right? Anyway, he's exiting, so let me not sort of push him out, rather than that, let me give him an experience and keep the door open.
Yeah.
Right? That's changing. That I can really see that. Second one, what you rightly said about the fact that there are a lot of instruments for people to invest in today and make their money grow, but that asset portfolio, the famous pie chart that we all of us have seen it, right? This is what you want to allocate across all of this. I think that remains.
Yeah.
That remains. It's a matter of time that every pie, people will realize there's nothing in this pie. I've got to do something about that particular pie. All the younger generation will probably realize that, right? So the deposits part of it definitely adds a lot of resilience to our economy, right? This is the part where I was alluding towards your thought process about, do you really think we will lend to people without bank accounts in the future? Or are we already doing it, right?
Yeah. So so NBFCs are doing that, right? NBFCs can't open bank accounts.
Can't open bank accounts.
To that extent, it happens. So if you're talking about whether banks would lend, look, I would say there's enough demand.
Yeah.
So it's not that people have to go to extreme measures to lend. In fact, you have to be responsible about lending. With account aggregator frameworks coming in, where you can actually assess the multiple bank accounts to understand the risk and also get a sense of where the EMIs are flowing, etc. It gives you a lot more visibility from lending perspective.
Yeah.
But of course, having your own account also enables you to shift the chunk of deposits that coming in. I don't see that going away anytime soon.
Okay, so on the AI part, Anish, I just thought I'll broaden up a little bit of a perspective when we spoke about AI going ahead and managing some of the processes a little better with banks, right, today. And you being an AI practitioner as well, what do you think is a skill building that's required as a country? So you also alluded towards, in one of the conversations you mentioned about productivity can go by 2x or 3x, which means to say that all of us can be a lot more productive. Leveraging AI, if we have to be productive, what is it that we should stop doing and what is it that we should start doing, or what is it that we should learn new? Right?
So I think
probably
it
learning new.
Starts with 2-3 things. I think one, especially, and I limit it more from a banking perspective because there's a larger theme of AI and skills and employability. I'll not get there. But I think what is different this time compared to the previous tech disruptions, the speed. The speed of change is quite rapid.
Yeah.
So for the ability for humans to adapt to change is going to be a big challenge. And I speak a lot about that often, that the pace of change is much faster than the ability of humans to adapt to it. Having said that, what's different in the approach? Today, what has AI done? It has commoditized knowledge. It's so easy. So knowledge is not an arbitrage anymore.
Yeah.
Not only that, it is also creating a lot of content, a lot of reports, images, etc. So ability to translate that knowledge into an output also is going to be a commodity. What's going to be different is your originality.
Yep.
Your ability to think on your own, connect different dots and come out with problems and solutions. And which is where then AI can be a companion. So an AI as an assistant is how I see an assisted AI organization. Now, what does it mean in the context of banks, for instance? For example, regulations. AI can help you actually build a lot of models and predict risk, find out gaps through RegTech, for example. Or when you're doing your BRD, it's a hated word among bankers, you've seen, right? Who will write
BRD.
the BRD? But who will design think?
Yeah.
You do a good quality design thinking, the BRD English can be written down by the GPTs of the day. So there is a lot that it can make you productive if you are smart enough to use it. So the biggest thing that I keep telling within my team as well, outside, please do not dumb yourself down by just blindly using AI. Because you throw something, it will give you an output.
Yeah.
But if you are not studying enough, if you're not going deep enough, you will not be able to control the outcomes. You will not even know if the output is good or not so good. It will make you look smarter, but it will not make you effective.
True.
So I think AI can be a big shortcut to failure.
Yep.
But if you use it well, it can actually help you be far, far more productive. As Sundar Pichai mentioned, he's in the space of democratizing intelligence. Now, if intelligence is democratized, what else do you need? You need empathy.
Yeah.
So if you combine empathy with intelligence, you become very, very powerful. So now human managers have to be collaborative, have to be far more empathetic, be able to connect the dots well, go deeper into your subjects, and yet collaborate more. It needs a very different mindset, right? So I think it's a mindset shift. Are we having those conversations in the boardrooms? Are we having those conversations in the workplaces? I don't think so.
Yeah.
There's no time.
There's no time, exactly.
But we have to do that. So it's very deep, but it's there on the wall. It's not going to change.
It's not going to change. Exactly.
So the organizations which adapt faster to this reality would end up being better off. But there's a lot to be done, I feel.
Yeah, very true. You're right. Absolutely about democratizing intelligence. Intelligence is a democracy today that exists. But interestingly, when we've been trying to do a few AI experiments, it's the prompt engineering, which is now the new skill to be learned. Right? All of us should know the thinking is over. You have to get it done. How do you get it done? Through the systems, through the GPUs or through the SLMs or LLMs and things like that. It's here to stay. But the point is about how much of there's always a dilemma, right, among the organizations also. Like I look at another organization which in a typical parlance of electric cars, there's one company which never believed in electric cars. They're also doing extremely well. There are companies who believed in electric, they're also doing extremely well. It's like the famous scooter comes back in a new avatar, right?
Yeah.
So there is always this parody that exists in our mind. Do I take a leap or do I not take a leap?
Yeah.
Right?
Yeah.
But AI is such a thing that I think all of us can do with it definitely something or the other. It depends upon to what scale are you willing to go ahead and do it and how ready are you. But it's going to be part of us at some point in time.
And it will need curiosity.
Yeah.
I think people who are more curious, they'll be able to adapt faster.
Adapt faster. Exactly. The innate fear needs to go and say that let me try. Let me take the first step.
Yeah.
I think this is the way in which I remember one of my friends, he still doesn't use WhatsApp. I keep teasing him. You live in the Stone Age days. Right? So that
Maybe we'll start using it when you don't need chat messages.
In your chat
AI
messages.
assistants
You
will
have
take
a
over.
device. You have a device here which reads out the messages. You're already seeing that happening, right? It gives you location, it gives you everything, right?
Yeah.
So AI is a very, very interesting one. But beyond the underwriting use cases, beyond the fraud use cases, we didn't touch upon one big element, which is an amorphous creature that is beckoning us, which is fraud, right? And it's taking various forms and shape. And just like the way we are talking here, I'm sure there are people looking at plotting, how do I go ahead and execute my mission on the fraud side of things, right?
Yeah.
So on that point about how could AI combat fraud or help us with enormous amount of data crunching, you alluded towards earlier about the money flowing faster in terms of a cyclic manner. At any point in time, if there is a credit mechanism that AI engine keeps giving, that this is the floating credit this person has at any point in time, money becomes a little more liquid, right? It flows a little faster. Your thoughts on using AI to look at fraud as well as build that resilience in the underwriting wherein I'm able to say that, hey, there is a trust that is established with this person and I have AI monitoring him continuously across. So I can lend more and more, better and easier. Something like that can we think of, which makes sort of a blockchain between us and AI, which makes underwriting simpler.
Yeah.
Since we were alluding towards underwriting 2-3 times.
Sure. So I think AI in terms of fraud management is a space where a lot of work is already happening. And today you have very advanced machine learning models which are already doing a lot in terms of anomaly detection, in terms of scraping out stuff. So a lot has happened on the transaction monitoring side, as well as, probabilistic detection of fraudulent transactions. So while yes, the number of frauds have of course increased because digital transactions are also increasing, but you'll also find that a lot of them are getting detected and caught out. As far as underwriting is concerned, again, and I think that is the whole spirit of continuous underwriting, which is essentially with account aggregator and all these frameworks coming in and various other data stacks that are there, it's very much possible to build those linkages. And that's the point I was trying to mention, which I mentioned briefly, that there has to be something in between your underwriting and your standalone models that you build, because you can do a continuous heat mapping in terms of 1 or 2 rolling quarters beforehand. And that's possible if you take multiple data sources together and try to create linkages. And that's a big need of the hour, because as you rightly said, the signals or the threats are not just visible in your balance sheet and bank statements. By the way, I call them historical because your bank statement, balance sheets, they reflect transactions which have already happened.
Yep.
What you need is data sources which may impact what may further happen to those balance sheets and bank statements. So those signals, those events that are there in the environment today is very much possible to be consumed through digital infrastructure and the India stacks of the day and so on. And if you create a 360-degree approach, the second thing which will of course bolster AI to a great extent, especially in the context of this data, is to build systems and platforms around collaborative data exchange.
Yeah.
It's very important that the various entities in the economy, while they're competing on one end, I think there's a lot more to collaborate in terms of how that data is shared with each other. Because ultimately fraudsters will attack the weakest link in the whole ecosystem. So the larger institutions will have more resources to do stuff. But what about the smaller institutions? So data, when we use the word democratization of data very frequently, but we still create some Chinese walls. Yes, data privacy, security, all of that has to be sacrosanct. But beyond that, if those walls are intelligently collapsed, it would actually build in more such mechanisms.
Yeah, amazing. Actually, data will be the new oil, is what somebody said, rightly so, right? And AI is going to rule over data for a long time to come now. So shifting gears, we as a economy, we progressed very well in the last few years, right? Of course, there will be some critics who will say no, but in terms of at least speed of transactions, speed of making payments, all of that we are able to do very fast, right? The rest of the world is watching us very closely to look at it, right? You have some thought process around how some of these things we could take up. For example, our account aggregator framework, which is a consent-based architecture, is a fabulous one, right? The same consent-based architecture, imagine being used in healthcare, or imagine being used in retail or any other spaces, right? Wherein I alluded towards data massaging initially, right? Here in a consent-based architecture, there's no option for the end user to look at the data. It's passed between two institutions, right? I'm only giving a consent and watching the data flow. Imagine the same thing could happen in healthcare. Some of these things actually could solve various use cases for organizations across the world, going beyond India, right? Your perspective on where we could help or where things could shape out very well for rest of the Western economy or the Eastern economy, any of those Southeast Asian countries, any of those?
No, I think it's a very important point. I think when we speak about a Viksit Bharat as a mission, it's not just about, in my opinion, building a very robust, developed economy, but also being a leader in certain spaces. You alluded indirectly to the stuff that we are doing. For example, UPI anyway is a great success story. And I think the entire digital infrastructure, the way we built, I remember if you look at US, 70s, 60s, it invested a lot in its state highways, and that propelled a lot of its growth. I think India is investing a lot in its digital highways. And that's our model of growth. And we have to keep building on top of it. So where are the opportunities coming in, as you mentioned? I think there's a lot that has happened on the retail lending side and payment side. Again, we have new experiments now with CBDC, etc. So the good part is that, how many regulations today or governments today will have incubation centers, like say at an RBI innovation hub? We are encouraging innovation, and at the same time, we are also regulating. That is the beauty. You want to grow and you want to also encourage innovation while being responsible. That framework, along this with PPP model, we have so many fintechs today who are collaborating and building solutions. Now, the other piece I see is in the supply chain side. In fact, there's some stuff we are also doing on supply chain, trade digitalization. These are areas which will again help a lot in the growth. The other initiative that has happened is the gift city, where we are looking at offshoring financial services or rather onshoring them and allowing the growth to happen from there. That's again a big initiative. So I think all of these coming together when you look at all aspects of the economy, plus the digital infrastructure initiatives are not only restricted to financial services. There's a lot that's actually happening on health, on education, imagine they're also talking to each other. So insurance will take off because you have an ABHA and other stuff. You will have education coming up, and then, so all of it converges and you have different services. So what I call is not only financialization of every aspect of the economy, but also digitalization of every aspect of the economy. And it becomes a very nice overlay of the digital layer with the physical reality of the country. These, when they get propelled, India can actually take a lead in a few of them. And already UPI, for instance, there are some 20 odd countries we are looking at going to. Some are trying to build models, but I think it will go beyond that with all these innovations we are doing. I'm sure a lot of these can not only bridge the gap between India and outside, but we can actually take a thought leadership view, including some stuff that we'll do locally in AI, even blockchain. There's a lot that can happen.
I like the way you put forth. Actually, one nice example comes to my mind. You remember the driving license book we got when we got license first time?
Mm-hmm.
From the book till a card, till a smart SIM card, till DigiLocker.
Yeah.
I think we've come a long way of evolution, right?
Absolutely.
I still have that old book, which I have it with me as a photocopy kept, right? That license till now.
Yeah.
Come as a long way of evolution. When I go somewhere outside today, people still pull out licenses and we smartly show it on a DigiLocker.
Yeah,
right?
yeah, absolutely.
In India here, right? So I think some of these use cases can be taken to rest of the world to see how the document authentication happens, how the storing happens, how we, as you rightly said, one example is we've laid out a digital highway, whereas other countries might have laid really good highways. The license is still physical. I think we've laid out digital highways for ourselves, right? That's phenomenal. That's very strong. So on the other sectors also where you alluded towards agri, healthcare in my view is will transform in a big way. Health insurance, healthcare itself will transform in a big way because also I think we are in the right era of solving problems for 1.4 billion people and taking it to the world. We are not just solving it for ourselves, right? Look at the way some of the things that we're actually trying to export it to the rest of the world. Maybe your thoughts on the health insurance part of it itself, how it is going to change the perspective because of the fact that we have rich data today about health of individuals. We are also a country who's prone on talking about the whole risk management of human being itself, right? We are also prone on cardiac arrests as well as we are the diabetic capital of the world. Health insurance will play a huge role. Your perspective on data, your perspective on managing underwriting, risk management in insurance, use of AI, some broader contours around that would help.
No, I think it's already picking up. If you see the awareness among about health insurance picking up, and thanks to government program also on health where, they have given insurance cover, that's a very, very big initiative. So I think if everything starts with awareness and then of course convergence of data takes shape, let me give you a very hypothetical imaginary thought experiment. Imagine you have wearable devices and you can track the health of the individual, and basis that you start varying the premiums of the customer.
Yep.
It's quite possible. It's in the realms now.
Yeah.
So then you have a convergence of IoT.
Yep.
Right? So you have wearables, you have your blood parameters, and you have insurance actuarial coming through. That's a perfect convergence of IoT, AI, and financialization of your health. Now, and then you scale it up across. Not only does it prevent the losses that you may have or the risk that you run of finance, but also actually helps you and motivates to improve your health. So those are the convergences that's possible with the way we are digitalizing stuff.
It's actually a big data play there.
Absolutely.
You just said, right?
Absolutely.
It's about your own data that is coming up and your own data screaming and telling you, you got to do this.
Yes.
Right? And there's an insurance provider who's going to jack up your premium if you don't do it.
Yes. And that is where I often say, why push products?
Yeah.
If it adds value to my life, I will buy it.
I'll buy it.
Show me the value rather than trying to push it down my consumption patterns.
Correct.
And with data, you can do that.
Yeah.
So, but again, going back to the original DNA, you still have to be customer centric. You still have to be simple and genuine.
Yeah.
So if you build everything around empathy, all these will be possible.
Building on what you said about Sundar is very interesting. Sundar Pichai, you quoted that, there is AI is going to be a horizontal. The only thing is that you got to bring in compassion and the empathy. I think that goes a long way for us to show compassion, empathy in terms of retaining customer, bringing in the customer centricity, right? As well as the fact that you would sort of treat all customers equally because you have a serving mindset towards your customers, right? That's a big one for us as a country. We'll also become a Vikasit Bharat by taking everyone along, right? Not just leaving some bad experiences with the customer. Right. Your final thoughts on how we could leverage AI for hyper-personalization and better customer experience and serving the customer, anticipating some needs of the customer and going ahead and proposing much in advance or looking at, being his guardian sort of a watch.
Look, the classic hyper-personalization we speak about is n = 1.
Yeah.
Treat each individual as unique. And I think the biggest need today in the banking space, if I may speak about, is a 360-degree view of a customer. So right from the time the person has done an application to the life cycle of the customer of maybe collections or cross sell, you have to look at all the data at one place. And I think that's where the data lakes, etc., and the CDPs, etc., that are coming through will really help. The challenge I see is that how does every financial institution adopt it?
Yeah.
The cost of some of these technologies and adoption is very high.
Very prohibitive.
So maybe a SaaS-based approach where there could be a timeshare on a cloud, etc. If those are solved without any risk to data, privacy and confidentiality, that can really unleash a lot of innovation, because there are a lot of fintechs and NBFCs, smaller banks who are very keen on this. I think there are two challenges. A, how do you look at this entire piece at a 360-degree view? So laying out those models. So I think the next set of innovations in terms of SLMs, maybe AI as a service or data as a service, or rather models as a service, sorry. And even these platforms can be on a public cloud with safeguards, and then you ping and you get those information. I think if some innovations are done on the delivery of it, a lot of these hyper-personalization aspects, both in terms of acquiring customers and servicing customers. I think one area which is very important is service.
Yeah.
Today, that look at the number of service requests that come into the call centers or to the different banking platforms. It's huge. So with AI, not only conversational AI, because that is coming up in a big way, but also can it be so simple that if I have a query, I can just easily access it and get most of it resolved DIY in my language, in the way I understand it.
And at my time.
At my time. So if using AI, those are possible now.
Exactly.
So again, we'll have to, but at the end of the day, it starts with thinking how my customer behaves and then coming. So I don't see it as just as an analytics problem or a tech problem. It has to be starting first with the human behavior problem, and then you work backwards.
Yeah, convenience. If you give them convenience, they'll give the time to you.
Convenience and empathy.
Empathy. Yeah.
If you really understand how I behave, right? What are my insecurities as a customer? And then you build around it.
True.
So I think product design is something that AI cannot replace.
Absolutely.
The core of it.
Absolutely.
And that is where a lot of effort has to go in.
Awesome. Great to see that. So capital adequacy, capital efficiency, how do we look at your context on, as an economy, if you have to move in a direction of a larger GDP, larger trillions of economy that we will grow, right? Any closing thoughts around you on managing capital very efficiently, managing capital in a right manner, finding the right balance, as well as, building strong amount of resilience, keeping risk in mind? Some closing thoughts from you before we go off to 2-3 rapid fire questions.
See, there are a lot of things that can be covered here, but I'll just touch upon two specific dimensions so that it's interesting. One, I would say there is a big theme around asset tokenization, which should take off. But of course, we have to put our guardrails around it. India, as I mentioned earlier, has a shortage of capital. But there's still a lot of capital locked in households, which is not marketable or it's illiquid. For example, we have close to 25,000 tons of gold in households itself, right? Similarly, land. I mean, it's very difficult to estimate how much is the private land holding. Some broad numbers, I was reading close to 750 lakh crores. It's maybe, 2-3 times of our GDP. And a large part of it, 20-30% maybe, is under title disputes, etc. So government is coming up with land with Aadhaar, digitization of land records and all. So with all this data coming in, it's very easy, in future to actually tokenize these assets, but in a responsible manner so that it doesn't become speculative. But that can unlock a lot of capital. So that's one big area which I feel will help a lot. The second area around efficiency of capital is also, I think, the MSME lending part. Just to give you a perspective today, India is predominantly a cash credit and overdraft driven market. Right? It's around 56 lakh crore of cash credit OD and only 6 lakh crores of bill discounting that happens. Now, if you look at supply chain as a business, working capital, which is the biggest need of the MSMEs, they are bereft of it. Because they either depend on term loans or very high interest cost.
Loan sharks.
Exactly, right? Now, how do you solve for this? Because today, from a credit assessment perspective, the large institutions prefer to have large corporate anchors as the base. But if you can somehow make the invoices, the underlying purchase orders and invoices safer and better,
Yeah.
then you can actually lend even to smaller MSMEs.
Better underwriting, better
right? So you
credit
don't really need
availability.
to cut big checks and then expect the money to be discounted. Why can't you take a smaller anchor? But for that, the entire ecosystem of invoices need to be strengthened. So that is one big piece. The second area, of course, is looking at models like deep tier financing, etc., which again allows the capital to flow down. So we need rotation of capital and more instruments out there to enable. And we already have those, green shoots in or the opportunities out there. It's just about stitching those together as digital infrastructure and offering those to the market, which becomes very important. So both these are solvable, but it will need a little innovation. But we have the pillars to do that. That's the great advantage.
Absolutely. I think what you spoke about MSME is a lot understated as we want to become borrowing your line of Viksit Bharat as well as I think manufacturing base is a big one for us to grow because of the fact that ultimately it's the capital as well as it's the capital equipment that gets invested. How does it grow out? How much do I produce and things like that, right? But MSME is a huge area, right? Huge area of improvement for us as a country when we have so many other cities who wants to develop faster and who wants to also become developed cities as an economy, right? So that points me to about 2 or 3 rapid fire questions for you. Do you see MSME doubling in the next 5 years, MSME lending?
Why not? I would say opportunity is there. It will be a little tricky, but doubling roughly means we're growing at around 15-16%. Quite possible.
Quite possible. Nice. Do you see the surge on home loans also in the next 3-4 years? Not from Awas Yojana, but look at overall lifestyle of people itself. Today, it's no longer people buying new homes. I think they're spending more on revamping their homes, right? Because rather than buying a new home today, right? Home loan and home loan top-ups will be a big one. At least I would say in 3 years, do you think we will double the home loan lending?
Double means around close to 20-25% CAGR seems to be very high.
Very high.
And also it's about the quality of assets that are available. But certainly that's a market and it's an asset-backed market. Given the portfolio, given the focus today on balancing secured versus unsecured, clearly that's a segment and space that should grow. But I can't speculate on a number. But clearly a very big area. But again, depends on so many factors, which micro markets we are talking about, etc. But it should be an important space to be in.
So I'll give you a little sliding question based on our conversation so far. 5 years from now, would you go back to becoming a banker or would you be an AI-led company guy?
I think I'm still a banker. I'm working in an organization which is owned by 18 banks. So in fact, it's more of a banker than I was earlier. And I think AI is going to be very much embedded into banking space. So why not both?
Banking with AI. Nice. On that note, I really appreciate you sparing time today. Thank you so much for spending time. This was awesome to share some time with you.
Thank you so much for having me. Wonderful conversing always with you and great insights. Thank you so much.
Yeah, thank you.